Hi traders, Yam Sai Lakshmi from Mind and Metrics. Let me start with a quick question. How many of you have ever heard the news say Sensex crashed and thought, should I be worried? For many, the stock market feels like a mystery, just numbers on a screen. For others, it's a roller coaster of profits and losses. But the truth is, the stock market is the heartbeat of our economy. Today, we'll explore it together, starting with the basics, looking back at the history of Indian markets, understanding exchanges, brokers, CB, and ending with how you can participate responsibly. What actually is stock market? Imagine you run a small restaurant. Business is good, but you want to open two more outlets. Instead of just taking a bank loan, you invite people to invest. They buy a share of your restaurant. You expand and they own a slice of your success. That's what companies do. They raise money by issuing shares and investors buy them. So remember this, a stock is not a lottery ticket, it's ownership. Here's a fun story. In 1875, a group of 22 brokers gathered under a banyan tree in Bombay to trade cotton mill shares. That informal meeting became the Bombay Stock Exchange, Asia's first stock exchange. Then in 1992, India saw a revolution. The National Stock Exchange was launched. It brought electronic trading. No shouting, no paper slips, just computers. This made markets faster, transparent, and accessible to the masses. Today, BSE's Sensex and NSE's Nifty 50 are like thermometers of the Indian economy. When they rise, optimism spreads. When they fall, caution sets in. The two pillars Indian stock markets, BSE and NSE. Think of BSE as the wise elder, historic, traditional, and home to thousands of companies. Think of NSE as the energetic youngster, dominating trading volumes and using cutting edge tech. Together, they are the twin engines driving India's markets. How many of you think the stock market is only about shares? In reality, it's like a supermarket with many aisles. Equities, company shares like Reliance or Infosys derivatives, futures and options, used to hedge or speculate commodities, gold, silver, crude oil, even wheat currencies. Pairs like USD-INR, EUR-INR bonds, safer fixed income instruments. Each aisle has a flavor, some sweet and safe, others spicy and risky. Like schools and offices, markets have fixed hours. Opens at 9:15 a.m., closes at 3:30 p.m. Monday to Friday. Commodity markets stay open till 11:30 p.m. to sync with global trading. When you open Zerodha or Grow and click Buy Infosys, what really happens? You aren't buying directly from NSE. Your order goes through a broker who acts like Uber. They don't own the road, but they connect you to your destination. Traditional brokers like ICICI Direct and HDFC Securities coexist with discount brokers like Zerodha, Upstocks, and Angel One, who have made investing affordable and app-driven. CB is the watchdog. Now let's ask, with so much money at stake, who ensures fairness? That's the role of CB, the Securities and Exchange Board of India, created in 1992. Let me share a real-life example. In the early 1990s, a man named Harshad Mehta manipulated markets using banking loopholes, creating a bubble that eventually burst. Thousands of small investors lost their life savings. That scandal changed everything. SEBI tightened rules, enforced transparency, and cracked down on insider trading. Today, SEBI is the referee of the stock market game, ensuring players follow rules, penalizing foul play, and protecting small investors. Many of you might be wondering, can I invest if I'm still a student? Legally, you need to be 18 or older, and just three things: a PAN card, a bank account, a demat account where your shares are stored electronically. Once you have these, you're ready to invest. Non-resident Indians and foreigners can participate too, under RBI and CB rules. Why does the stock market matter? Think about Infosys. It went public in 1993 at just as 95 a share. Those who invested and held on saw that share multiply into thousands of rupees. Early investors became crore-patis. This isn't just luck, it's the power of markets. Companies raise funds to build factories, hire people, and innovate. Investors grow wealth and secure their futures. The nation grows stronger as savings turn into productive investment. The stock market is not just numbers, it's India's growth story in motion. But let me ask you, how many of you know someone who lost money in the market? It happens. Why? Because too many people treat the stock market like a casino. They chase tips, gamble with savings, and panic when prices fall. The truth is, the market rewards knowledge, patience, and discipline. Start small, learn steadily, and think long term. Never invest money you cannot afford to lose. As Warren Buffett wisely said, the stock market is a device to transfer money from the impatient to the patient. So let's rewind. From a banyan tree in 1875 to today's mobile trading apps, India's stock market has come a long way. With world-class exchanges, SEBI's strict oversight, and innovative brokers, our markets are robust and globally respected. The next time you hear Sensex up 500 points, don't just think of numbers. Think of India's journey, of businesses expanding, jobs being created, and ordinary investors building wealth. And let me leave you with one motivational thought. The best time to learn about investing was yesterday. The second best time is today. So start learning, stay disciplined, and who knows, the next big success story of Indian markets could have you as part of it. Thank you.